There's a lie in fundamental analysis. The lie of linear cause and effect. If A happens, then B will happen. If NFP beats expectations, the dollar must go up. If a central bank sounds hawkish, the currency must rally. But the truth is that the market isn't a puddle. It's a living ecosystem. It doesn't respond to a single stimulus. It adapts to a change in its environment. This is the reality for most retail traders. Let's call it layer 1, the world of immediate reaction. It's a world governed by the color of the folders on ForexFactory. Most traders see the color of the news release, place the trade on that, and think they're a market trader. Not quite. Layer 1 isn't a strategy, it's a trap. It's the market's great filter, and it's designed to separate the spectator from the player. Now, to escape that trap, you must ascend to layer 2. Here, we understand that markets aren't just data, they follow stories. We call them narratives. A narrative is the market's dominant belief at that moment in time, the story that justifies the flow of funds. The task of a market trader is to understand that narrative, word for word. Let's take this trade on gold from July 2025. You have to remember what the environment was like back then. It was all about one thing: tariffs. The entire flows around gold was linked to that one single narrative. So the script was simple. As long as the world's biggest economy was playing tariff threats with its trading partners, capital needed a place of safety. And gold is the oldest, most reliable safe havens in the world. And that's the point that really matters. Now, as you can see on our trades, we add confluence with seasonality and technical analysis, and that gives us a much more complete and high quality setup to take action on. Because think about it, that beautiful, clean break of technical structure on the chart is the market raising its hand and saying, alright, I'm ready to pay attention to the macro narrative now. That's why technical analysis is very important in this process. It confirms us when the market is in tune with the fundamental context. So in this case, tariff uncertainty building up was bullish for gold, and the technical trigger was suggesting the market was ready to listen to that. In other words, the tariff story was the why, and the technical breakout was the when. And that's all. That's the whole trade. We're not guessing, we're not reacting, we're just executing on a thesis built on the only variable that actually mattered at that moment in time. Tariff escalation equals bullish for the precious metal. Period. And this is layer 2. It's not just data, it's stories, narratives. The dominant sentiment at any moment in time, the story that investors and institutional traders tell themselves to decide where to move their funds. So now here's the most important part of this video. The same way we build the narrative to enter the trade, we use that narrative to understand how long we need to stay on a trade. Let me explain. So we're in the trade, we're long gold, and it's doing what it should be doing. Gold is going up on tariff uncertainty. But then we start to hear a different narrative growing. Suddenly the tone was changing. Trade deals were getting signed. Japan, the Philippines, Indonesia. Now you have to understand what this means on a deeper level. The entire premise of the trade, the pillar of tariff uncertainty, was starting to dissipate. And so the same way we got into the trade on tariff uncertainty, we got out of the trade on what was turning into less tariff uncertainty as Trump was signing deals left and right, reducing the risks. So we acknowledged that the plot was changing, and we took some profit on the trade. And sure enough, that was the top in gold for a couple of weeks. Now, this is one of the biggest traps in fundamental analysis. It's called narrative fixation. It's falling in love with your story. You did the work, you found a narrative, and you feel smart about it, so you hold onto it, long after the market has moved on to the next chapter. This is the most dangerous form of confirmation bias in fundamentals, because it keeps you stuck in a hold and stale market narrative. Now, see what's going on here? While retail traders are playing checkers with the ForexFactory calendar, we're playing chess with the narrative behind the charts, because often a single piece of data is basically useless on its own. It's one pixel. It tells you very little. What actually moves the market is the narrative, the bigger picture. And while retail traders see green number on the economic calendar and thinks buy, the institutional trader, the one who's actually moving the needle, is asking, how does this single pixel change the entire story we're watching? That's fundamental analysis. So if you learn a new way to read it today, if you feel like you've been given a new syntax for this language, then let me know with a like on this video and your thoughts in the comments. I read all of them.